Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. And yes, after repeated appeals and desperate clamor from you guys, we have finally got Santo back on the show. Santo, welcome back.
Thank you, CJ. Good
How does
to
it
see
feel?
you
Are you dreading the fact that you are back on the show? Or are you really looking forward to it?
Feeling quite fresh after the break.
Great. Good to have you fresh. That means, actually, that will not be good for me. That means you have a lot of barbs on, waiting in your arsenal for me. That said, looking at the show, of course, today is a big day for one company, and that is Uniparts India. The company is going to be a latest debutant on Dalal Street this morning. Now, if you look at, the grey market for Uniparts IPO, grey market is largely indicating a pretty decent start, almost a 10 to 15% sort of a premium listing for the stock from its issue price. Now, if you look at the counter itself, given that this has the past one and a half years, investors have tried to run away from any sort of an issue that was say pricey or expensively priced. This issue actually saw a decent amount of demand, given the fact that its valuations were considered reasonable by a lot of analysts, as well as the fact that its growth outlook is also quite attractive because it caters to one of those sectors, many of the sectors at this point of time where their growth outlook is also quite attractive. You talk about the agriculture space, you talk about the automobile space. Now, if you look at the past 3 years performance, this company's earnings, that is PAT, has grown at a CAGR of about 63% on an annualized basis from FY19 onwards, FY20 onwards, I beg your pardon. Sales have grown north of 20% as well. So clearly, the earnings performance has been quite strong. But what has been, a key takeaway from that earnings performance is the improvement that the company has made in its EBITDA margin profile. The EBITDA margin profile is now in excess of 21% for the company. Return ratios, return on equity is in excess of 27%, which is very, very attractive, given that at its higher end of the price band, the stock was available at around 15 times 12-month trailing earnings. So clearly, that is one of the reasons why a lot of analysts had recommended investors to subscribe to this issue, not only for listing gains, but as well as for longer term, possibly longer term returns, good returns there. Overall, this is one stock where analysts at this point of time are expecting about a high single digit to a low double digit sort of a growth in earnings over the next 3 to 5 years. And therefore, I think even if you see a decent listing on this stock, this could be a stock to hold on to for a long period of time.
Well, CJ, my gripe against IPOs in general have always been the same. Just before the issue, you see the earnings move up quite sharply, and in this case, you have flagged the point that revenues have grown at almost 63% compounded for the last 3 years. Now, how sustainable is this going forward? I'm not very sure about that. So that's one point. Of course, besides the point that you always have to subscribe to any issue at the price that the promoters and the bankers see fit. See, initially you will always see some kind of a bump up. In most cases, that's also due to technical factors more than anything else. And now the grey market is already indicating a 10% bump up. Maybe you will see the stock doing well for the next few days. Just a couple of concerns again I would like to flag out. One is obviously the concentration, 70% of the business coming from the top 10 customers, which I feel could be a bit of a risk. We'll have to see how that plays out. And the other point which has been flagged off by brokerage house Chola is that the two of its main products, which is the 3-point linkage system as well as PMP, which is the precision machine parts, these two, the outlook for that, the growth outlook for that is okayish. It's about 7% CAGR for the next few years, which is not very high. So you're saying probably that the valuations are pretty reasonable. I take it, but there again could be a reason for that. You may see the stock do well for the next few days, but I would experience has shown that it's always waiting for a few months. Better be a few months late than be very early when you're buying into IPOs. And last year, many of the IPOs clearly would have given cause for that.
Absolutely. I think दुखता हुआ जख्म पे हाथ रख दिया सांता आपने वहाँ पे last year के बारे में बात करके. That said, of course, I take your point that the two main business that are the base business of the company, they are seeing the outlook there is not that great in terms of the growth rate that the industry is expected to perform at. But I think in terms of the client concentration, the management itself is taking steps towards diversifying and getting into newer markets. So once they get into newer markets, their global footprint gets bigger and bigger as they're trying to do on their export side. I think that is where you could see a decent amount of the concentration of the top 10 clients coming down, maybe towards the 55 to 60% range, which would be, I think, decently manageable. It will be probably, it will help reduce the risk of any adverse sort of events as far as the clients are concerned. But I think overall, this is a sort of a business that will, I think, slowly and steadily keep chugging along. It may not be a very attractive business in terms of, being a blockbuster sort of a business, being in the, the latest sector that is in trend in the industry. But I think this is a sort of a company which seems to me that probably it will remain underrated, will continue to work, do its own thing, give you 14 to 15% sort of annualized growth on earnings front on a regular basis. And, after 10 years, you realize that you have seen a decent amount of, returns on the stock. So that is where I'm coming from. But of course, your points are definitely well taken. Moving on, looking at the trade setup for today, and it's looking like a sort of a flat to, moderately negative start for our benchmark indices. If you look at the XGX Nifty futures, they are indicating almost a 40-point cut on the Nifty 50 this morning. Also, the cues from Wall Street were not that great. The Wall Street benchmark indices also ended on a negative note, largely on caution ahead of the US Fed's meeting outcome later this week, as well as some negative data points coming on the economic front as well on Friday evening. That said, from an emerging market point of view, clearly the ongoing weakness in the US dollar index as well as global crude oil prices, I think that will continue to give a lot of optimism to bulls on the street, Santo.
Well, definitely, and I think right now, CJ, it seems to be a case of no news is good news. Definitely, in the absence of any major negative news at this point, we could see the markets continue to climb higher as they have been doing for some time. An odd day of correction here and there makes not much of a difference to the broader trend,
right,
which to me looks very clearly positive, at least for some more time. And that said, a quick look at the FNOQs. Now, we are seeing a long build-up in the futures of Cummins India and Nestle. Some bit of short covering there seen in Godrej Consumer Products, Marico and HPCL. And lastly, some bit of short build-up being seen in futures of IT stocks in general, and the main ones here are HCL Tech, Intellect Design Arena and Birlasoft.
Well, thank you for those FNOQs, Santo. Moving on to the newsmakers of the day, and the first one is Paytm on my radar.
You never let go that stock.
Of course, Santo, it is the most talked about stock in the market. So, and if there is a new update coming in, I have to touch upon it. I cannot ignore it. That said, the stock will be in focus very much. On Friday we saw that bumper move on the stock because of that supposed consideration of the share buyback plan that the company's board announced. Today, actually over the weekend, of course, the company came out with its business performance update for the month of November and October. Now, if you look at some of these performance metrics, loan disbursement, that is the number of loans that the company gave out during the month of October and November, that is a 2-month period, compared to a year ago period, jumped almost 150%. Average monthly transacting users on its Paytm Super app rose about 33% in October and November combined compared to the year ago period. Also, merchant devices, which has of course been a key component that the company has been talking about for a long time, that also saw a 15% uptick to about 5.5 million devices, if I am not wrong, in the month of November compared to where it was in the month of September or September 30th. So clearly, the business side of the company continues to chug along quite well. The impressive performance that we have been seeing from Paytm quarter after quarter now, almost for 2 to 3 quarters now, I think it looks like the December quarter will also be quite a decent quarter for the company.
Well, Swandana Spurti is my newsmaker for the day. The board is considering raising funds through a private placement. It will be meeting on December 14th for that. Now, the stock has been in the news for all the wrong reasons for quite some time now. That was mainly because of the spat between the founder Padmaja Reddy and Kedara Capital, but those differences have been largely resolved, and probably that has also prompted market to relook at the stock. We've seen the stock bounce back a fair bit from the lows it had seen in June. It's still a long way off from its high of about 1200, which it had touched last year, but from 300 the stock price has almost doubled over the last 6 months.
And moving on, Santo, your top brokerage bet of the day?
Honeywell Automation, this is by Nomura. Nomura has a buy rating on the stock with a target price of 50,642. Now, Nomura's key arguments in favor of Honeywell Automation is that the stock is a preferred play on the India digitalization story, and basically it sees both execution and margins steadily picking up in the quarters ahead, and also the company expects the turnaround which is being seen in the second half, the current half of this year, to continue well into the next year as well. And besides that, Nomura is of the view that valuations are pretty reasonable when you compare it with the peer group.
Well, interesting thoughts coming out there on Honeywell Automation. Santo, the top brokerage bet for me this week would be, or this today would be IndusInd Bank. Now, last week also I had touched upon the stock, in my stock takes, but today, this morning, Jefferies came out with a note on IndusInd Bank. They have retained their buy rating on the counter with a price target of about 1,600 rupees. So clearly, they're looking at a decent upside as far as IndusInd Bank is concerned. Now, in their opinion, the stock is now ready for the next leg of re-rating. Now, we know that IndusInd Bank has been one of the best performers within the Nifty Bank Index over the past 12 months. Now, they believe that because that asset quality improvement rally is now over, the next rally will probably led by the improvement in growth metrics as well as the return ratios of the lender. So that is why they believe that the next leg of re-rating is on the anvil for the lender. Also, despite the rally that we have seen in IndusInd Bank, Jefferies is of the opinion that valuations remain quite attractive at current levels, and they have also raised their earnings estimate or EPS estimate for the lender by about 3 to 5% for FY24 as well. Going ahead, they are looking at IndusInd Bank improving their loan growth rate to more than 20% on an annualized basis from FY24 onwards, compared to about 15 to 18% at the end of the second quarter. So clearly a very positive call coming out from Jefferies, and you could see the stock being much in demand today morning.
Well, and with that we move on to the stocks on our watch list this morning, starting with Kalpataru Transmission. Now, CJ, this is a stock which had been underperforming for quite some time, but in 2022 suddenly the fortunes of the company seem to have changed for the better. Things are beginning to look up there, and according to analysts tracking the stock, one of the key reasons is that the improvement in its order book, which now the backlog stands at close to about 19,000 crore. There's been a good improvement in order intake. It's been pretty strong for the second quarter also, although the numbers broadly disappointed a little bit because there was a huge margin miss because of various factors, raw material prices, high logistic costs being some of them. But on the whole, you're seeing good traction across all the key segments in which Kalpataru Transmission is operating in, be that transmission and distribution, oil and gas, and also its railway segment. Now, there's also the impending merger with GMC projects, and one reason which analysts say the stock had been quoting at a discount to KC International, that now will go away because the company, following the merger, the company will not be investing in any more non-core assets. So that partly helps it. Besides that, the merged entity is expected to grow at close to about 15 to 20% for the next couple of years. There's also guidance from the company. It has said that the promoters will be looking to reduce the pledge share. That again has been one of the reasons which has been weighing on market sentiment. So with most of the legacy orders being executed, that should give some relief on the margins front as well. And besides that, raw material prices anyway are easing a bit. So probably better times ahead for Kalpataru Transmission according to the brokerages tracking this stock. MK is positive on the stock, although Prabhudas Leeladhar has downgraded the stock to an accumulate. Pretty much the stock performance has taken a bit of a knock in the last couple of weeks, but on the whole for the year so far, it's been had a good run so far.
I think, Sandra, for me, two issues which will really stand out for Kalpataru. Of course, you touched upon it, is the level of promoter shareholding that is pledged at this point of time. Before I get back to Kalpataru, let's take a quick check at the market. We have the opening bell ringing, and it has been a negative start for the market. It almost actually a much deeper cut than what we were expecting, almost a 0.5% cut on the benchmark indices at this point of time. And you can see that, that said, the broader market is doing quite well. The Nifty mid cap and small cap index just near the small, the flat line, and therefore aiding the advances declines, which is still in the favor of the bulls, with about 1200 stocks advancing on the Nifty, on the NSE, about 750 declining on the NSE.
Well, yes, it's been a negative start, but as I say, CJ, don't feel bogged down, because we still have got 6.5 hours of trade still left, and you've always seen more often than not, you've seen the market make a good comeback towards the end of the day.
Yeah, funny thing is, Santo, that I think recently it has not been, been able to do that. So it'll be very interesting if we continue to see this level of profit booking that we are seeing in the market. We are now actually, the worrying thing is that we are now trading below the 18,400 mark. Now that was supposed to be a very, very crucial and very major support for the bulls on the benchmark index. Now, if we do trade below that and we do not see that comeback happening, then there is a possibility that this profit booking phase in the market could accelerate. And let's not forget that we have the FOMC meeting coming, on Wednesday. So till then, I doubt that there would be any sort of bullish, positions being taken by traders. So it looks like we are in for a very volatile and a little bit choppy, markets as far as the benchmark index is concerned.
Well, as long as people are taking profits, you don't need to worry, CJ, because that is a good sign. It's only when there is too much leverage getting built into the system and everyone talking about fancy price targets that you need to start getting worried.
Well, on that note, coming back to Kalpataru Tower, now Kalpataru Transmission, sorry, two concerns, Santo. One, of course, the promoters pledge share, which is almost 50% of their stake in the company. Now that clearly has remained an issue for Kalpataru for a couple of years now. It's not a new issue that the market has been talking about. It's been an issue that the company has indicated that they're trying to resolve for a long time now. But so far the movement on that has been very, very little, or at least not as desirable as the market would expect. The second thing is that I am getting a little suspicious of this order book business as far as capital goods companies are concerned. It reminds me of the price to sales era of .com companies, or you talk about what in real estate you call the land value thing, that when the tide was good, everybody was looking at land value or development value of land, but nobody really thought that whether that land could be developed or not, whether the company had the execution power or not. And we saw what that did to a lot of real estate companies, in the future. And I think with capital goods companies, again, given the fact that these are quite good times as far as stock performance is concerned, again, you're seeing a lot of analysts depend on order book size and, extrapolating it to think that earnings performance will also translate in a similar manner, when we know that in the past, capital goods companies have always faced execution issues. And you can see that in the second quarter performance as well, as far as Kalpataru Transmission. Now, in the case of Kalpataru Transmission, it also belongs to a sector which is notorious for execution problems, which is the power sector in our country. So I would not read too much at this point of time, or at least be a little cautious about that 19,000 crore order book for the company at this juncture. That said, looking at technically, the stock clearly has had a great run, 45% upside in 2022, looking very strong on the technical charts as well. But some of the momentum indicators are now slowly and steadily inching into the overbought territory. So I will not be surprised that this recent bout of consolidation and profit booking that we have seen on this counter may continue for the next couple of months before the market makes a fresh view on this company sector.
Well, the comparison is not very fair, I would say. If not order book, what else? See, I understand that point about land bank. That was, of course, that there was no way of vetting it one way or the other. It was depending on market prices. Here, you're pretty much, it's solid, right? When you say order book, now execution is another part of it. But it's not a ratio or something abstract. So that's the only point I would like to differ on.
I take your point. It's the execution risk that always remains, and that is always going to be true with most capital good companies, because you never know what sort of problems the client might face. Suddenly the client might decide that, oh, actually I want to take it slow in terms of order deliveries, and therefore you are waiting on your machines and your parts in that sense. Moving on, the stock on my radar today would be Punjab National Bank from the PSU bank space. Now it looks like after SBI in 2021 and Bank of Baroda in 2022, Santo, I think 2023 could be all about Punjab National Bank, and looking like the setup is ready for PNB to have a blockbuster 2023 after spending the past 12 to 18 months recovering from the bad debt crisis and of course the COVID pandemic. Now JP Morgan came out with an upgrade on the stock today. They have upgraded the stock to a buy rating, and they believe that it seems like the re-rating in the stock is going to continue and is going to see a very strong re-rating going ahead. Their opinion is that the recovery in the bad loans at this point of time is far outpacing any sort of new bad loan creation or fresh NPL creation in the system for Punjab National Bank. Also, JP Morgan, although did caution that when the tide is rising in the banking sector, all boats will also rise with it. So PNB clearly is benefiting from that. Another key thing that PNB benefits from is the the latest development that happened during the RBI monetary policy last week, Santo, wherein the RBI has increased extended a date of holding bunch of your securities in held to maturity till March 2024. That will basically save PNB from marking its government security investment on a market basis, and therefore probably reducing the losses on the treasury side, because a lot of the securities bought recently by the lender would have faced capital losses because of higher interest rates. So interesting thought coming out from JP Morgan. I think this will be one stock and lender to watch out for in 2023.
Well, did JP Morgan say that a rising tide will lift all boats,
yes.
in the banking sector?
Yeah.
Well, if that is the case, probably it makes more sense to throw in your lot with the stronger boats, right? Because if you look at the PNB chart over the longer term, this is
the lighter one that rises the highest, right? If you can time
well,
it.
probably. So that makes it a better tactical bet, right?
Yeah.
If you look at the long-term chart, this stock is one which has never really made money for its shareholders. And after that Nirav Modi scam from 2018 onwards, it's really been struggling. Even from the pandemic lows, the stock has just about doubled, right? So it's not really a stock at this point in time that inspires much confidence. I would say it's a good tactical bet, as you mentioned, that the lightest boat rises the fastest. So probably when things improve on the margin, it's the stocks which have been beaten down the most, where there's no interest, that typically tend to do well. So I think even if the stock does well, CJ, it could be more due to technical factors than some fundamental factors out there, CJ.
I take your point, Santo. Moving on to your last pick.
Well, it is Sundram Fasteners now from the auto ancillary segment. Now, the company's revenues have grown at about 8% compounded for the last 5 years, which is when you compare it with its peer group, it's been quite good, because overall the auto ancillary segment has not had it very good for the last few years now. ICICI and Sharekhan are among the brokerages which have put out a report on the company based on an interaction with the management. And now, according to ICICI Securities, the company is now diversifying and expanding its product base. It has grown much faster than its peer group over the last 5 years. Now, what it's trying to do is also protect itself whenever there's a downturn, and because of that, it is diversified into other product areas like bevel gears, hot forging, making EV parts, wind energy. It's also planning to get into the industrial fasteners segment. Besides that, overall the margins have been a bit under pressure, but that again is expected to improve going forward, considering that raw material prices have been easing. And according to ICICI Securities, the company is planning to make differential. So far it's been a supplier of differential gears, but now what the company is planning is to make its own differential gear assembly and sell it to passenger vehicles. It plans to go about it in a gradual manner, a soft launch kind of thing for the first 6 to 9 months, and then scale it up. Besides that, there's also the wind energy, which right now is a bit of a capital guzzler, but there is, given that the whole world is moving towards renewables, this is one business which has plenty of scope there. Sharekhan has a buy rating on the stock with a target price of about 1100 rupees. ICICI Securities has not rated the stock. The stock again has seen a fairly good run up over the last 3 or 4 months.
Understood, Santo. I think if you look at, of course, the past 12 months have been quite good for Sundram Fasteners overall, because of the improvement that we have seen on the volume performance on the automobile side. But I think going ahead, some question marks have started to come up as far as the automobile volume growth recovery is concerned. We are already seeing brokerages point out that the mass market in two-wheeler is not really recovering because of the slowdown in the rural economy. Also, very recently, Nomura pointed out that even the small car segment, there also volume growth is not recovering at the level that a lot of automobile makers hoped that it would. Now they're expecting that car makers will be ramping up discounts in order to clear out their inventory, which they had built up in the hope that the festive period will provide a good pent-up demand for this segment. So clearly, with the mass market two-wheeler and the mass market, passenger car vehicle segment not doing great, I think it could raise a few question marks as far as the growth prospect of Sundram Fasteners, which are on the auto ancillary side going ahead. Also, the margin improvement, that still remains a little bit uncertain, given the fact that input prices overall have remained quite volatile. Now, recently with the China reopening, we are we are again seeing some bit of bounce back in input prices like aluminium and copper, for example. So going ahead, whether the sequential improvement remains comes or not, that still remains to be seen, and there is still question marks over there. So for me, I think the weak Q2 earnings, as well as the possibility of a slowdown in volumes from automobile stock companies, I think could limit the upside on the stock going ahead.
Well, and do we have any queries for this morning, CJ?
Not anything major, Santo, nothing much, so I think we can probably wrap up.
And that's a wrap on this edition of Market with Santo and CJ. Thanks for watching, and
yeah, and guys, keep following us on the social media links that you can see at the bottom of your screen. And of course, for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. Till then, have a great day.